Good morning. Thanks for your company this Friday, the 17th of July. Well, yesterday we had mostly encouraging economic news that Australian employment rose more than expected and US industrial and manufacturing activity beat expectations too, suggesting the recovery was intact. But overnight, a bit of a speed bump. US weekly unemployment claims unexpectedly rose, spooking investors, giving them an excuse to lock in recent profits. But it wasn't all dark and stormy. US retail sales rose 7.5% in June, following the record lift in May. Now, the sales boost also beat expectations too for the month as Americans continue to fork out cash on clothing, electronics, home appliances and furniture, sporting goods, music and books. And on the company side of things, Johnson & Johnson reported better than expected quarterly earnings and its shares lifted 0.7%. Morgan Stanley's quarterly earnings easily beat expectations too amid surging trading revenues, and their shares popped 2.5% higher. As for big tech names though, trading at record highs on the back of behavioural shifts, well, they took a bit of a breather. With Apple and Microsoft shares losing over 1% each. Now, in after-hours trade, Netflix shares fell 11% after announcing second quarter earnings below expectations, while subscribers and revenue rose more than forecast. But what alarmed investors was perhaps that next quarter's subscriber estimates fell more than expected. As for how the broad indices wrapped up the day, the Nasdaq was down the most, 0.7%. The Dow lost 0.5%, and the broader S&P 500 slipped 0.3%. Looking at commodities, the oil price fell 1% to $40.73 US. As we reported yesterday, OPEC and its allies will ramp up production. The gold price slipped about 1% to under its September 11 high territory. It's now 1,798 US an ounce, and the iron ore price lifted ever so slightly, 0.1% to $107.57 US, another new 11-month high. So what to watch today? Well, the Aussie share market is eyeing a lift of 0.3% if you do go by the futures, but you'd think that we might have a hesitant start given the odds are stacked. But keep in mind, the Aussie share market has already put on about 1.6% this week, and so far, as you can see, we're still sitting with a gain of about 33% from the COVID low. This evening, what to watch in the US, where housing starts are out for June, and ending on 3 trading ideas. Well, following Audinate, 88's 12-month results update yesterday being released to the market, UBS increased 88's buy rating and price target to $7.80. Yesterday, it closed 1.5% lower though to $5.30, but that doesn't take away from its cracking 118% gain from its COVID-19 low. UBS sees AV training being a key driver for success, add in the fact that it's added new products to its suite, and it's also driving video opportunities, and partners have been appointed to drive that growth as well. Secondly, ahead of CBA's full financial year results being released on Wednesday, the 12th of August, Bell Potter rose CBA's price target to $78. Now, yesterday, CBA closed 0.1% lower to $72.64. Bell Potter expects $7.8 billion in cash net profit after tax from continuing operations and a $1 final dividend. Now, CBA shares are up about 34% from their COVID-19 bottom. And thirdly, family tracking technology app for your smartphone, Life360. 360 is their ticker code. They had their buy rating and price target upgraded by Bell Potter to $4.80. Yesterday, the company closed 5.2% higher to $3.03, giving it a total gain of 89% from its COVID-19 low in March. Now, Bell Potter likes the 360 app. Their new feature includes family assistance, allowing 24/7 medical assistance as well, and immediate disaster response. Key likes for a lot of analysts. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.